Joe Dominguez, Your Money or Your Life. Welcome to the exhilarating summary of Your Money or Your Life, where author Joe Dominguez offers insightful guidance to help you transform your relationship with money and attain financial independence. Prepare to embark on a journey where you'll explore your financial past, calculate your real hourly wage, examine your spending patterns, and consciously minimize expenses. Discover how to value your life energy, increase your income, and wisely invest to earn income from your investments. This summary will engage and instruct you, using lucid language to demystify complex concepts.
Making peace with your financial past. To achieve financial independence, it is essential to come to terms with your financial past by visualizing your earnings and calculating your net worth. To do this, you need to prepare a balance sheet and calculate your gross earnings from the beginning of your career. By understanding your financial history, you get to assess whether you have underestimated your past earnings or thought you were safe just because you had support from others. Once you know your net worth, you can determine how you can shift your perspective on how much you might earn in the future. To calculate your gross earnings, look out for old resumes, bank statements, and records from the Social Security Administration. Ensure you correctly identify unreported income sources like cash prizes, money earned under the table, or family gifts. To calculate your net worth, differentiate between your liquid and fixed assets, your liabilities. Deduct your liabilities from your assets. Your net worth will help you in developing a clear picture of your progress and point towards the steps that you may need to take towards the future. Your time is your life. Each day, we spend our precious time working to earn a living. However, we don't always realize that the money we earn is not just a fair exchange for our time but also for our life energy. In order to transform our relationship with money and spend it on the things we care about, we need to challenge our assumptions about our earnings and expenses. This involves calculating our real hourly wage and tracking our money. By creating a table that takes into account our time spent commuting, dressing up and meal times, we can add up our life energy to earnings ratio to understand the true value of our spending habits. Tracking our money will help us challenge assumptions and base our decisions on reality instead of perceptions. Ultimately, it's all about knowing the worth of our time, our most precious resource. Categorize your spending. Learn how to categorize your monthly spending to gain insights into fiscal responsibility. Are you tired of living paycheck to paycheck? Do you want to manage your finances more effectively? The key to taking control of your spending lies in categorization. Budgeting is not the only tool at your disposal. Instead, you need to understand exactly how you spend your money. Grouping your expenses into categories that make sense to you is an effective way to get started. Take food for example. Depending on your unique lifestyle, you might have subcategories such as meals for guests, too tired to cook, or snacking. By precisely tracking the categories of your spending, you'll be able to identify the subcategories in which you overspend. Create similar subcategories for things like housing, transportation, and entertainment. After your transactions are entered into each category, subtract your total spending from your total income to determine your monthly savings. Now for the real magic. In order to determine how much of your life energy each subcategory costs, divide the money spent on any given subcategory by your real hourly wage. For example, if you spend $80 on magazines you tend not to read and your real hourly wage is $10, you spent 8 hours of your life energy to make that purchase. This insight may prompt you to reconsider before your next visit to the magazine stand. Categorizing your monthly spending is a step towards fiscal responsibility. By identifying overspending habits, you can consciously redirect funds towards your savings. Gain control of your finances today. Evaluating your spending habits. The book suggests taking a moment to reflect on what you would do if you didn't have to work and evaluating your spending habits. Start by evaluating the money spent in your subcategories and see if it aligns with your life purpose and values. Ask yourself 3 questions. Does the life energy you spent on each category correspond to the fulfillment and satisfaction you received? Does your expenditure of life energy align with your life purpose and values? How would you change your spending habits if you had financial independence? By objectively analyzing your spending, you might find that you're spending more money because of your job than you would otherwise. The key takeaway is to make minor adjustments to your spending, and you'll be on your way to realizing your dreams. Remember, no dream is too big. Tracking your way to financial freedom. If you want to make sure you achieve your financial goals, you need to turn your new system into a habit. Share your progress with others to increase accountability, but also track your progress with a wall chart. Draw a graph of your monthly income and expenses on a large sheet of paper and hang it on the wall. Use 2 different colors to distinguish your expenses from income and connect the dots each month. Seeing your progress on the chart will help you stick to your goals and identify patterns. Take control of your finances like Elaine H., who became debt-free within 4 months by using this method and making sustainable changes to her lifestyle. The Art of Frugality. The concept of frugality, often overlooked in modern consumer culture, has been regarded as a virtue by great thinkers throughout history. Being financially independent means practicing frugality by consciously reducing or eliminating expenses. This involves intelligently minimizing spending, avoiding impulse buying, investing in durable items, and getting creative with cost elimination. A wonderful example being, you could sublet an unused room instead of completely eliminating house cleaning and gardening services. Financial independence is attained by living within your means and enjoying what you have. Valuing your life energy. The 40-hour workweek is a modern concept that emerged during the Industrial Revolution. However, as working conditions worsened, workers fought for a shorter workweek. Leisure time was then associated with productivity, and during the Great Depression, free time became synonymous with unemployment. Today, our society's work-centered lifestyle has led to campaigns like "Take Back Your Time." The fundamental purpose of having a job is to get paid, and we need to reconsider how we spend our life energy. Increasing your income can help you achieve a sustainable future, and working toward financial independence means valuing your life energy. Doubling your income by pursuing a higher-paid job or a side gig can be worth the short-term effort, as it can lead to a more fulfilling life aligned with your passions and goals. Achieving financial independence with FIRE. The FIRE, Financial Independence Retire Early, movement teaches that investing savings can eventually yield enough income to retire. To achieve financial independence, individuals need to have enough money for emergency expenses, invest additional savings based on the long-term interest rate, track monthly investment income, and aim for a crossover point where monthly investment income exceeds monthly expenses. This is usually achieved when savings equal 25 times annual expenses. The traditional idea of retirement seems like a privilege reserved for the 1%, but the FIRE movement teaches otherwise. Supporters of the movement say that if you invest your savings wisely, it can eventually start earning enough money on its own to support your retirement and allow you to pursue what really interests you in life. This is all based on earning income from your investments. Unlike income from a job, monthly investment income is based on the income you receive from your capital. This includes income from interest, dividends, rental checks, and business profits, money you didn't have to work for. To reach financial independence through investing, the first step is to make sure you have enough money in the bank to cover at least 6 months of expenses. Once this emergency fund is in place, you can look at opening a savings account. The 8th step in the FIRE program is investing and tracking your additional savings. To calculate your monthly investment income, you need to multiply your capital, additional savings, by your current long-term interest rate. You can find this rate by searching for the current 30-year yield of U.S. Treasury bonds in the Wall Street Journal. Once you've done this calculation, plot the result on a wall chart along with your income and expenses. Over time, the line representing your investment income will begin to curve upward, and you'll reach a crossover point where your monthly investment income exceeds your monthly expenses. For most people, this occurs when you have savings equal to 25 times your annual expenses. So, if your average annual expenses are $36,000, then you'll need $900,000 in assets to reach financial independence. While your monthly investment income may seem small at first, consistency and patience will lead you towards achieving your goals. Investing for financial independence. After calculating your crossover point, it's crucial to become an expert in long-term, income-producing investing to achieve financial independence. Avoid middlemen, such as financial planners, and learn about your investment options. Investment income may come from rent or royalties from intellectual property, franchises, or natural resources, but most people will want to focus on earning interest or dividends through bonds, mutual funds, or the stock market. The majority of FIRE bloggers suggest investing in low-cost index funds, which are a passive approach that diversify your investments across broad portfolios of trading activity with low fees and minimal risk. If your company offers a retirement plan like a 401k, take advantage of it, as many companies match contributions. By making educated investment choices, you'll ensure your sustainability and begin living intentionally, even before achieving financial independence.
As we wrap up the profound insights from Your Money or Your Life, you are now equipped to make peace with your financial past, analyze your present situation, and plan for a fulfilling future. By mastering your real hourly wage, tracking your spending habits, evaluating expenses, and making conscious decisions to reduce unnecessary outlays, you move closer to financial independence. Moreover, valuing your life energy, generating income more creatively, and investing intelligently will help you find sustainable financial growth. Remember, the ultimate goal is to enjoy a content and purposeful life while knowing your fiscal affairs are in order and support the things that truly matter.